Whoops, can you guys hear me now? I was just on mute there. We'll go ahead and restart this. 1 second here. All right, we'll go ahead and restart it here. Welcome everyone to the daily macro update for Tuesday, November 4th. The United States stock markets have had a little bit of a sell-off here today, mainly because of a sentiment shift from going from rate cut expectations to inflation fears. Now, as we've seen from the past week or so, we've seen Jerome Powell from the last Fed meeting talk about how inflation could remain stickier for longer and how a rate cut for December isn't a foregone conclusion. And then you also have Fed Governor Waller coming on the market today talking about how inflation fears are remaining stickier than expected and that they thought that it would have been coming down from here. And so that's really what the major sentiment shift is concluding. And, when we take a look at the Cleveland Fed inflation expectations, you can see that they've posted it from September all the way through November. Now, these numbers, even though they are for that month, they get reported in the next month, right? So the September CPI gets reported in October, October gets reported in November, and November gets reported in December. And so what it's showing is that headline CPI is going to remain at 3% from now until the end of the year. The December CPI won't get reported until January. And so, a lot of the market was thinking that from, November to December, that inflation was going to keep coming down. My team and I still think that inflation still has room to come down after that. But headline inflation could be remaining sticky here, and that's not what the Fed wants to see. And so because of this, the futures market has really come down in terms of in terms of rate cut expectations for 2026. And at the recording of this video right now, there's a 70-30 split between a 25 basis point cut or a pause for the December meeting next month. So that's specifically what we're looking at in terms of market sentiment, but also too, when taking a look at the Real Clear Markets economic sentiment. This is from the Real Clear Markets. This is a third-party sentiment index, and it's still pretty accurate. What was interesting about this one is that it had its largest drop-off in a very long time, pretty much over 2 years. And when we take a look at this over the past 10 years, really the last time it had a drop like this was back in August of 2021. And so this was a pretty large drop off to levels that we haven't seen, since August of 2024, but that was on an uptrend. This is on a downtrend again. So economic optimism is still declining pretty rapidly amongst consumers. And that's, part of the whole fears of inflation remaining sticky. And so essentially it's pause over rate cuts. That's what the market is fearful of. And that's really what we're seeing more so as a confirmation on the yield curve as well. Whereas if you take a look at the 1 week performance, we've had a spike in the 2-year higher than the spike in the 10-year yield. And so this week is more of a bear flattening signal, which is typically more of a hawkish signal, in the short term. So that's what we're seeing, not only being confirmed in the actions of investors, but also too with the actions in the bond market here. And so what this has caused in the market so far today is a pretty decent correction. It has not disrupted bullish trends on the S&P 500 Qs or the Russell 2000. Those still remain in bullish trend. And really, if we take a look at our trading range model, it still hasn't even gotten down to the low end of the trading range just yet. And so there could be some more follow through into tomorrow because of this. But, when taking a look at volume, you really didn't see a huge spike in volume on this correction. Again, you want to see if that happens heading into the day tomorrow. But as you can see, ever since the correction that we saw back on October 10th on accelerating volume, the market has had a pretty decent rebound since then. And, it had an over 5% rebound within those 20 or 19 trading days. And then if something goes up by a lot, of course, it doesn't go up in a straight line. It's going to have a correction there. So as of right now, this is simply a correction that we're experiencing. And yeah, looking for other bullish opportunities that are positively correlated to the S&P 500 in order to make additions there is what you want to be looking for. We cannot say the same though for things like Bitcoin, because this has had a completely accelerating bearish trend. And on our X page or Twitter page, we posted the other day on this pop right here that we are experiencing a bearish divergence, a classic bearish divergence between volume and price action, where you had prices having a bounce while volume completely dropped off. And at the same time, not only did we see that, but if you look on-chain metrics have been continuing to show that whales are distributing. So, long-term cryptocurrency holders that have a large amount of Bitcoin in their wallets, they have been incrementally selling some continuously. They have not entered in a accumulation period. And so when something breaks trend and has a bounce on lower volume, that's a classic bearish divergence. And so we are calling that out. And so it's no surprise, and it should be no surprise, that Bitcoin is headed lower now that we've had a spike up in volume as price decelerations continue here. So yeah, with Bitcoin, it was a classic bearish divergence. If you didn't catch that, I mean, that's as simple as TAs you can get. You don't even need to use anything fancy except for price action and volume. So if you don't use volume already, I would highly recommend, just YouTubing how to utilize that. If you need help with how my team and I use that, we have our 6-week challenge that you can go ahead and find out some more information on using the link down below for those who are on Instagram or TikTok. It's in the link in my bio there. But yeah, the cryptocurrency markets are not performing well. And what my team and I also like to look at in terms of the cryptocurrency markets is that it is one of the newer and fast growing asset classes. And with that, it's on the far end of the risk spectrum, right? And typically, when you have a large amount of liquidity running through the system, the risk assets on the far end of the risk spectrum end up having a large benefit because of that. And so all that to say is that we like to use the Bitcoin as well as the cryptocurrency markets as liquidity indicators. And that's one of the main themes that we've been talking about over the past couple months here, as well as, I'm sure you've seen it in the news with the Fed ending their quantitative tightening measures. And so, when we take a look at what liquidity has been doing, it's been having a large drop off here. And we've been talking about how this could remain a headwind for Bitcoin. And so, it shouldn't be a surprise that we're seeing this type of reaction from the cryptocurrency markets. And since this is remaining in bearish trend, guess what? You just let it ride until it comes back to bullish trend. In the meantime, there's plenty of other assets that are in bullish trend that you can find at the low end of the trading range in order to buy some more. And so just because our model is short-term bearish on Bitcoin and some of these other cryptocurrencies doesn't mean that they won't be bullish one day. It's just in this short-term period, you want to make sure you are risk managing your capital and not just bag holding a lot of these different bearish trends that could be causing a lot of losses in the portfolio. The number one rule is not to lose money. So yeah, I'm sure there's some people that are not liking that message, but I'm going to be real with you. I'm not here to try and pump you or shill you a dream for cryptocurrencies. I'm here to be real with you, as well as to provide you with a risk management strategy, not just, I think this crypto is going to go up to this. Here's a price prediction because of this, and that narrative. Yeah, yada, yada, yada. Let's all get emotional and put, $5,000 blindly into this coin because, I think it's going to do well. You're never going to experience that on this channel because that's not a way to actually risk manage capital. So in the meantime, as we wait for Bitcoin and altcoins to settle down a little bit, there's plenty of other bullish trends in order to take advantage of. Gold is still showing some weakness, so my team and I are not adding to gold, as well as, even though I still have a position in gold, I'm not adding to it. Still want to see what happens, giving it some time to breathe here. One of our members asked about the steel ETF SLX. And yes, this is a bullish trend, but we're seeing a pretty large spike in volume here. And so when something has a large spike in volume on a price correction, I usually like to give it a few days just to see what happens if volume is able to settle down and if it remains near the low end of the trading range, because I believe that's where it's at right now. Yep. So even if something's at the low end of the trading range, that doesn't automatically mean that you buy it. It means that you want to pay attention to the context in which it's reaching the low end of the trading range. And in the example of SLX here, it's on higher volume. And then also too, if I want to take a look at the historical volatility ratios, you can see that I do like how this is coming down a little bit. And so that's good news, but I still want to continue to see that that volume has maybe a couple of days of it calming down a little bit. So we'll see what happens. That's similar to what you got around October 13th and 14th. And so, if you saw that initial move down, that was on higher sell volume, and then it started to decelerate here. And then you started to get some opportunities around, the 14th as well as the 16th here before it had a nice little decent, let's say you bought even on the 17th. A nice little 9% run up from there. So it's worth it to wait until volume settles down, but that's what I'm looking at there. Now, one way that my team and I like to determine what type of season it is with the cryptocurrency markets, and I think everyone should be able to use this, is taking a look at the different dominance measurements. And so there's 3 different dominances that my team and I like to track. The first one is Bitcoin dominance. So that's BTC.D. And just like how we take a look and track the trends of price charts, you want to be able to track the trends of the different dominance percentages. And so obviously Bitcoin dominance is in a bullish trend here as it continues higher, series of higher highs and higher lows. And then the next one that we like to look at is stablecoin dominance, which this is USDC dominance plus USDT dominance added together. And as you can see, this also is in a bullish trend. So stablecoin dominance ever since pretty much the beginning the beginning of September, end of August, made a higher high, and then in the middle of September made a higher low, and then since then it's been making a series of higher highs and higher lows. That's the structure that you typically see in a bullish trend. And then, as you can see here, whenever you see stablecoin dominance start to accelerate like that, you really want to raise some red flags when it comes to having a lot of exposure to the cryptocurrency markets. And so seeing that Bitcoin dominance is bullish, stablecoin dominance is bullish, as well as the third one, which is DeFi dominance. This is just a measurement of dominance within DeFi tokens. Now, there's other categories of altcoins, but DeFi is the largest category. And so when taking a look at DeFi dominance, this is in a bearish trend. And so when you see stablecoins in bullish, Bitcoin dominance is in bullish trend, as well as DeFi dominance is in bearish trend, then you have to see, okay, what's Bitcoin doing itself? Because just by looking at the different dominances, it's clearly not altcoin season. Altcoin season is typically when you see the opposite. That's when DeFi dominance or others.d is accelerating. And then you also have a bearish Bitcoin dominance and a bearish stablecoin dominance. But what we're seeing right now is the exact opposite. And so with that, seeing that Bitcoin dominance is in a bearish trend, you can see that this is clearly not in any way, shape, or form a time to have exposure to the cryptocurrency market. Some people will disagree with me, saying like, "Hey, I'm a long-term holder. I just buy Bitcoin when it has different dips." That's totally fine. That's your strategy. It's just not my team and I's strategy, because again, what would stop Bitcoin from going from 100K, all the way down to let's just say this level of support here around 83K, that'd be around a 17% drop off. I don't know about you, but I don't want to buy here and just see another 17% drawdown in my capital. I prefer not to do that, especially with the math of portfolio gains. You have to essentially, if you experience a 50% drawdown in your portfolio, it takes a 100% gain just to get back to break even. And so I'd rather not be put in that situation. And so I've had much more success buying cryptocurrencies as well as Bitcoin when it's in bullish trend, and then just, holding it throughout its bullish trend than trying to pick bottoms. So that's really the strategy that I have found that works best for myself and my team. But that's really how we determine if it's Bitcoin season, stablecoin season, or altcoin season, using those three metrics there. And so, yeah, taking a look at some of the other most important macro developments here. The dollar is about to close, or it already closed at new highs. So the dollar has pushed up higher than its July 31st high, and it remains in a clear bullish trend to levels that we really haven't seen since May of this year. So this is a very different type of trend that we're seeing in the dollar. And, a strengthening dollar does wreak havoc on a lot of different assets. And so it's really important to pay attention which assets have a positive or negative correlation with the dollar. And so, that's why we pay attention to 30-day rolling correlation matrices in our communities, because it'll give you a sense of the different correlation trends and where they're headed. So, yeah, this bullish dollar is really an environment where you could see volatility higher, and you really want to be paying attention to assets that are not oppositely correlated to the dollar. And let's see here. I think lastly, let's just take a look at some of the different performances for today. So, yeah, taking a look at this chart here. This is going to show the daily performance for today. Yeah, the best performer of today was the dollar. You had the S&P 500 down 8 basis points. You had silver down 59 basis points. You had gold down 43 basis points, and you had Bitcoin down 319 points. So yeah, the big signal just by looking at these different these different macro assets is that this was more of a liquidity tightening type of day. Bullish dollar, bearish Bitcoin. So definitely interesting, seeing that there. We could see a little bit of follow through heading into tomorrow, but in terms of the bullish trends that are still maintaining right now, the S&P 500 Qs, IWM, so small caps, are all still maintaining their bullish trend here. So, my team and I are not panicking on the markets saying like, oh no, this is the top. What are we going to do? That could change if we do see more of a stronger drop on accelerating volume, but we're just not seeing that currently. So, yeah, make sure you own bullish trends. Make sure you don't own bearish trends. Really, the only bearish trends out of the top 10 stocks, Meta is in bearish trend, as well as Berkshire, which is having a decent pop. Good little out there. And then Walmart is also in bearish trend, having a little bit of a pop as well. So yeah, if anything, this was a great buying day on select opportunities that were providing, low volume, low end of the trading range opportunities there. But yeah, that's pretty much the updates that I have for you all today. And we can go ahead and get into some questions as I have another meeting here coming up. All right, let's take a look at Instagram here. Yeah, I apologize about the sound in the beginning. Let's see. Phone's about to die. Let's see here, looking on the Instagram. I told y'all not to get into gold, not a bull market. I mean, gold still remains, in a bullish trend, but it's lost a lot of momentum there. So yeah, not adding to it. We'll see what happens there. Are we going to see that blown off top we routinely see in crypto this Q4? Seasonality doesn't really matter. All times are different. So Bitcoin is a good buy level around here. Couldn't disagree more. I'm not looking at long-term buy levels. Models are very accurate if you have ones that will help you and that they have a high success rate. It sounds like Young Mamba might have some exposure to Bitcoin there. All right, so not too many other comments here. So with that, we can go ahead and end the stream there. I appreciate everyone for joining. Again, if you guys would like to learn more about how to implement a macro process, as well as learn how to spot some of these trends, to look at the insights that my team and I are posting in our group, you can go ahead and check out the link in my bio there and schedule a call with me, and we can go through and review the 6-week challenge. Before we end, we have one comment from Michael_Gwiz. What do you think about silver, palladium as long-term holds? I don't necessarily do those long-term holds with assets that are that volatile. So, yeah, I mean, something like silver, it's just super volatile. That's not silver. That's silver miners. Silver still remains in a bullish trend, but it's something where it's losing momentum right here, and so I wouldn't want to just pile into it for it to go down, another 10% or so. So I mean, we'd have to see this start to show some more signs of strength returning before I would be comfortable with putting in more of a longer term bet on it. But yeah, I mean, just buying something for the sake of holding it for decades, that's not necessarily how my team and I operate there. But yeah, I appreciate everyone for joining. Appreciate everyone for taking a look here, and we will catch you in tomorrow's daily macro update. Bye, everyone.